Altcoins are exploding, and the US just dropped a $5 trillion crypto bombshell. Will this set off the next Altcoin Supercycle? Well, ladies and gentlemen, stay tuned to find out. Imagine waking up to find the financial map has been redrawn overnight. Borders erased, rules rewritten, and the new giants moving mountains behind closed doors. While headlines squabble over politics and ETFs, what's actually unfolding is the largest cash migration in market history. From Capitol Hill to Wall Street boardrooms, from Lagos to Buenos Aires, every major player is scrambling for control of the digital dollar. You won't find this story on TV, ladies and gentlemen. It's moving too fast for the mainstream. And by the time they catch up, the best seats will be taken. Right now, capital is stampeding out of broken currencies and legacy payment systems, piling straight into stablecoins and our beloved crypto. Behind the scenes, bankers and lawmakers are making the kind of deals that only happen once in a generation, quietly engineering the next super cycle while the public watches the old charts. If you're feeling that tension, like the ground is shifting, like something huge is about to break, you're right. But this time, you're not on the outside looking in. This time, you have a treasure map. In this episode, I'm pulling back the curtain to show you what's really driving the $5 trillion land grab, who's making the rules, where the biggest flows are headed, and how you can ride this wave. All right, guys, without further ado, let's get into it. And you guys already know what makes me super happy. Destroy that like button, guys. Let's do it. This week, the US Congress made crypto history. The House voted 217 to 212 to move forward with the Genius Act and the Clarity Act. It's a major milestone, but the job's not finished. The process was so intense and drawn out that this became the longest recorded vote in House history. Both bills are now barreling toward final passage, with the Genius Act already cleared by the Senate and set to reach President Trump's desk within days. The Genius Act will put the first real regulatory framework around stablecoins, giving them a clear, federally approved path to scale. The Clarity Act brings in long overdue structure for the entire digital asset space, spelling out exactly how the SEC and CFTC will split jurisdiction over crypto markets. Lawmakers fought hard over privacy and anti-CBDC provisions, with high drama on the House floor. And as we discussed in yesterday's show, President Trump personally called key Republicans to flip their votes and lock in the bill's progress, while Freedom Caucus leaders secured a later vote on a CBDC ban. And Maxine Waters, oh my God, this lady, and top House Democrats called these bills dangerous, but political winds have changed. Now Washington is all in on crypto and stablecoin infrastructure, turning the regulatory switch from red to green and making a successful crypto week in Congress so far. Here's what's next. That record-long vote was just the warm-up. Now, the House will cast the final yes or no votes on all three crypto week bills, likely within the next day or two. The Genius bill goes first, and if it passes, which it will, it heads straight to President Trump's desk for signature, possibly just within days. The Clarity bill still needs to clear the Senate, so expect more debate there. The anti-CBDC measure will be folded into the defense bill later this year. Hopefully, everything will move forward without too much drama, but don't be surprised if there are some bumps along the way. We've got lawmakers like Elizabeth Warren, and they're still doing everything they can to stir up fear and slow down progress. Check out this clip. Her and Maxine Waters are like the evil witches of crypto. Check this out.
And guardrails to make sure that crypto isn't used to blow up our entire economy. So I'm very worried about that, but I want to add one more twist, and that is the Clarity bill has all those problems, but it also has a provision in it that would let any company listed on the New York Stock Exchange opt out of SEC regulation by just digitizing themselves, put themselves on the blockchain, and all of a sudden it turns out that Amazon or Meta or General Motors is no longer governed by the SEC. You do realize that literally would blow up the value of the New York Stock Exchange.
Man, can you believe this lady? She is out of control. But did you catch that? She's warning that crypto could blow up the US economy and openly says it threatens traditional infrastructure like the New York Stock Exchange. Well, yeah, we've been talking about this for years, and that's the point. Crypto is meant to disrupt traditional infrastructure. It's meant to force the incumbents to innovate. We are tired of the banks telling us it's going to take 3 or 4 days to send my money to another party, and it's going to cost me $50 to do so. We are tired of trading only from 9 to 5, Monday through Friday. Now the incumbents have no choice but to update and integrate crypto infrastructure. This is why we're here. And this is why we're making our bets on the future incumbents of the world. Hello. And now check this out. Congress just introduced a new bill that would require banks to consider your crypto holdings when you apply for a mortgage. Imagine being able to use your digital assets to finally buy a home and participate in something like everyone else. That's a huge step toward making crypto part of everyday financial life. For me, this is massive, and I really, really hope this passes. And between you guys, you and me, guys, like I'm not looking to buy, as I said yesterday, I'm not looking to buy a house anytime soon, but in the near future, in the next year or so, after we're all, you guys and me, are all filthy rich from playing this market perfectly, yeah, I would like to have these lenders, because I'll tell you, there is a difference, right? So already I can go to Aave, collateralize, wrap Bitcoin or Ethereum, take out a loan and use it to buy a house. That's how I bought my villa in Thailand. Now, that's nice, but the way traditional mortgages work is you put a down payment and then you're borrowing the bank's money, right? You don't have all of this collateral up front. And so now what this law is proposing is that they take your assets under consideration when qualifying you for a more traditional type of bank loan. And you know, from the best investors in the world, it's all about other people's money and leveraging other people's money. Borrowing, debt is a good thing. Robert Kiyosaki, Rich Dad Poor Dad, says that debt is a good thing when used in the right manner. So would I like to borrow the bank's money and have to put less of my capital up front? And would I rather use Aave for other things, like doing a little bit of leverage when I'm bullish in the market? Yes. So for me, this is a game changer. And for all of you guys watching this, it's also a game changer. We don't want to have to part ways with our Bitcoin and Ethereum and our other hard assets that are going to go up over time. But we would like them to be considered when someone looks at our financial picture as a whole and says, is this person qualified to take out a bank loan? It's a big deal. While Congress cleared the legal path, Wall Street and the biggest global banks began racing to secure their place in the next wave of digital finance. Citi, JP Morgan, Bank of America, and even Ripple are all preparing new digital dollar strategies. Citi's CEO explained how their clients are demanding real-time, cross-border, multi-asset solutions that only crypto-native infrastructure can provide. This is what we were just talking about. Citi Token Services will soon move assets instantly between New York, Hong Kong, London, LA, leaving behind their outdated, antiquated incumbent settlement systems, and finally making global money move at the speed of crypto. Ripple is pushing for a national banking charter and a Federal Reserve master account, enabling it to custody funds and issue stablecoins directly through its subsidiary, Standard Custody and Trust. But we'll dig into this more later on the show, because I found something that has me thinking that maybe the XRP army saw something the rest of the market missed all along. And if you're part of that army and want to see me dive even deeper on Ripple, just let me know in the comments. After watching how Ripple is positioning for a new era, I gotta admit, I'm getting a lot more bullish. Meanwhile, the largest public holder of Bitcoin Strategy just hit a record $128.4 billion market cap. They are now holding 602,000 Bitcoin, which is 3% of the total supply. This same week, spot Bitcoin ETFs absorbed nearly 11,000 Bitcoin in just 2 days. With Glassnode data showing ETFs are now buying Bitcoin even as the market pulls back from new all-time highs. This is creating a structural supply crunch that leaves little room for retail to catch up. The institutional power grab is accelerating, with banking infrastructure, stablecoin issuance, and ETF accumulation all converging. Look, guys, you know already that I'm not sidelined anymore. I'm full in. I'm a bit leveraged through Aave. I mean, I've got no more dry powder sitting on the sides. But if you're watching this and you have some, I don't want to be giving you financial advice, but I'll tell you what the way I would be looking at this if I was on the sideline right now, watching and wondering if I should go into the market right now. We could have a pullback soon. The market's been on fire, right? We did have a pullback. Went to $123,000, went down to 116, and we saw strong demand, strong bids coming in even at that price. And we still see almost $1 billion coming in yesterday in the Bitcoin ETF flows, 700, 800 million, something like that. So if you're looking for that typical 30 to 40% pullback that typically happens in these bull markets, could it happen? Possibly. Do I think it's going to happen anytime soon? No. We just broke the 7 months of consolidation. We went from 112 to 123. Now we're back to 118 or whatever. Could we possibly go to 150 and pull back 30%? Yeah, maybe, right? Maybe. But the way I would look at this right now is that I'm just too nervous about Bitcoin continuing to skyrocket, Ethereum continuing to skyrocket, and being on the sidelines and watching, waiting for that moment that never comes. I'd rather go in now, and if it pulls back, that's fine. I just hold through it and wait for it to run higher. The most important crypto adoption story right now is not in the US or in Europe. It's happening globally because of inflation. People around the world are seeking safety from failing local currencies and moving their savings into the US dollar, but they're not reaching for physical cash. They're using stablecoins as their lifeline. How do we know this? According to Artemis data, stablecoins have averaged $1.85 trillion in monthly transfers in the past 12 months, or roughly 22.2 trillion on an annualized basis. In other words, not only is more money pouring in, but it's also circulating through the crypto economy at the fastest pace we've ever seen since the last major peak. Argentina and Nigeria have seen stablecoin inflows surge over 300% year to date, with over 1.2 million new wallets created in just the past month. Wow. For millions living under runaway inflation, USDC and USDT have become lifeboats. And it's not just stablecoins either. We're seeing this adoption globally for Bitcoin as well. And remember, Bitcoin was made for this. Let me show you guys something. Chancellor on the brink of a second bailout for banks. This is a message that Satoshi put into the Genesis block in something called the Coinbase transaction. Now, Coinbase, fun fact, if you didn't know what it meant, Coinbase is a transaction that happens before every block is printed on Bitcoin. Essentially, it's like a transaction, right? And in that Coinbase, on the very first block, on the Genesis block, that Satoshi, when he created Bitcoin and set it live and free, this is the message that he put in there. And the point was prophesizing, but already seeing what was happening in the traditional financial world. And this is why Bitcoin was created in the first place, was created to protect people against hyperinflation. And yeah, you can say Argentina and Nigeria are going through hyperinflation. We can see all these other countries too. But where do you think the US is headed as well? Because of stablecoins, it's going to slow down the rate of inflation and debasement of the dollar because it's exporting demand on a global basis, as we just mentioned. But as tens of trillions of new dollars get printed and new value is created out of thin air over the next 10, 20 years, you better believe that the purchasing power of the US dollar will continue to decline at a pace more rapid than ever. The world is onboarding to stablecoins for survival. And the stablecoin tipping point is already lighting up heat maps across the globe. This is exactly the outcome President Trump has been aiming for. He made it clear he wants to keep the US dollar dominant. And right now, he's doing that with stablecoins. And speaking of actually using your crypto in the real world, here's something I know a lot of you guys have been asking for. And a big thanks to my amazing channel sponsors. Ever wish that you could spend your crypto in the real world? The Xapo card lets you do exactly that. I use it almost every single day. You load up with Bitcoin or stablecoins and spend them anywhere Visa or MasterCard is accepted. With Xapo's high limits, picking up a car or a Rolex is just another swipe. Traveling? Your Xapo card automatically converts currencies at the true market rates with no hidden markups like many other suppliers. And when you pull out the black metal card, its weight says it all. You play by different rules. Every swipe, you're stacking more Bitcoin, up to 1% cash back in Bitcoin with all your purchases, while your USD balance earns daily interest up to 3.9% and 0.5% on your Bitcoin. So you're actually generating yield by just keeping a balance on your card. Need cash and don't want to sell your Bitcoin? Borrow instantly against it. No selling, no capital gains, no headaches. All of this comes with Swiss level security, 24/7 support at a cost of $1,000 for an annual membership. Yes, it's a premium price, but for serious crypto holders, it's the ultimate tool for freedom, privacy, and profit. But if you sign up with my link below, you'll save $500. So hit the link in the description below, join Xapo, and unlock your crypto real life today. And if you guys are looking for an amazing exchange, I partnered with BloFin, a no KYC exchange open to Americans outside of New York and Washington. If you guys are in those states, I'm sorry. Low fees and every trading pair you could ever want, all in one place. They're having a trading competition now with up to $4.2 million in rewards and even a Tesla Cybertruck as a reward. Deposit and receive up to 20% cash back on your trading fees. And if you sign up with my link, send proof and you'll get access to my private Telegram group. Altcoin season is basically here, guys. And I'll be sharing my best calls on there before they ever hit YouTube. Just click my affiliate link in the description below and I'll see you on the inside. All right, guys, now back to the show. Stablecoins have become America's secret weapon in the global financial system. Today, stablecoins are the 15th largest holder of US treasuries, surpassing nations like Saudi Arabia and Germany, with $192 billion in treasury bills backing digital dollars. Top officials from the Treasury, Commerce Department, and White House have now gone on record. Stablecoins are essential to extending dollar dominance and making sure there is plenty of demand for US government debt. Estimates suggest stablecoins could provide $2 trillion in future treasury demand. So they found someone else to buy the US debt. And that's people who want stablecoins. Both the Stable Act and Genius Act demand full reserve requirements and provide regulatory clarity. And Ripple's push for a national bank charter shows that stablecoin issuance is about to become a regulated, institution-grade business. The game now is about who will own the infrastructure of the global dollar settlement as US policy and Wall Street align. And guys, if you're new to crypto, or if you were around last cycle and the cycle before, 2017, 2021, or just been around for a while, or you're new, I'll tell you a quick story. Our markets have been plagued by Tether. There's been Tether FUD every few months. Oh, Tether's not holding reserves and blah, 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 blah. They're a scam. And it's really scared a lot of folks, right? And now with this regulatory environment coming in, Tether will have no choice but to comply by the new government rules if they want to be successful, which means that we eliminate the Tether FUD, which is one more thing of uncertainty that we no longer have to deal with. And if you want to know just how big this could get, the latest research from independent analytics firm ASXN predicts that stablecoins could reach a total market cap of $4.9 trillion, basically $5 trillion over the next decade. Analysts got there by adding up potential adoption across offshore dollar demand, global remittances, business payments, and money market funds. If stablecoins start capturing just 10% of that, it pushes the total market size into the trillions. So when you hear about a $5 trillion power grab, it's the real math behind where global capital is heading as crypto, stablecoins, and digital dollars go mainstream. Let's circle back to Ripple. XRP is shaping up for one of the most significant institutional upgrades in its history. Over the last year, XRP has outperformed Bitcoin by triple digits, even without a US ETF, major treasury company adoption, or native DeFi yield. But that's all about to change. If Ripple successfully secures a national banking charter and a Fed master account, that would give them the ability to issue its institutional stablecoin, the RLUSD, and settle transactions on the Federal Reserve Payment Network. Ripple's evolution from a cross-border payments company to a full-fledged stablecoin issuer marks a strategic pivot that is flying under the radar. If these bills pass and Ripple's banking play is approved, capital rotation into the XRP ecosystem could be one of the strongest we've ever seen. Now, guys, full disclosure here, I'm an early investor in equity of Ripple. So, of course, I want to see Ripple be super successful. And I think that what they're doing right now is going to be incredibly valuable for the Ripple side of the business, the equity side. I made a video before about the XRP token and the true demand and how I think the RLUSD could cannibalize its utility a little bit. But I don't think it matters, right? I think that all this news, all this marketing, and the sheer cult-like XRP community, the XRP army, is so strong. Like I said, Ripple hasn't had an ETF yet. It hasn't had anything else, treasury buys, but it's all coming. And with the right market sentiment and altcoin season, and what I know to be one of the most popular coins in America, I have no doubt that Ripple's about to go on a wild run, or XRP for that matter. So guys, let me know in the comments below if you want me to do a deeper dive on Ripple and the potential speculation of where the token might go. While the main focus has been on Bitcoin, Ethereum and the rest of the altcoin market have just delivered one of the most powerful momentum reversals ever. On the very day the new US stablecoin laws advanced, ETH broke $3,400, adding $30 billion in market cap in just 24 hours. Yesterday alone, over $186 million in ETH short contracts were liquidated as fresh volume flooded into spot and futures markets, with ETH futures volume up 27% and open interest climbing 9%. What does that all mean? It shows traders who are betting against Ethereum got wiped out as price surged, and a wave of new money rushed in, fuel for even more upside. Arthur Hayes called this the return of ETH season, and the data backs him up. As we mentioned the other day, the altcoin season index is now climbing fast. Right now it's at 39, and historically, whenever it gets above this range, altcoins tend to go on mega tears. Of course, it's one thing to make money, but it's another thing to keep it. So when it approaches the 75 level, it's a classic signal to start taking profits and scale out of your positions. At the same time, Bitcoin dominance has been crashing hard over the past week, which is one of the cleanest early warnings that capital is beginning to rotate from Bitcoin into ETH and the broader altcoin market. The crypto fear and greed index is ticking well into full-on greed territory, which almost always coincides with rising risk appetite and strong altcoin momentum. ETH ETF inflows just hit a new record of $726 million, surpassing the previous record of $428 million. But guys, just a word of warning here. Don't be surprised or worried if at some point in the next week or two, we see a bit of a correction. We've been going real hard up in the right direction. We might not get it, right? This is a real institutional bid, and we've only really started seeing it in ETH over the past week or so. So maybe it takes a while longer. But I just want to tell you that fundamentally, everything is super sound. But in every bull market, we get these bullbacks or these pullbacks, and that's totally normal. The ETH Bitcoin pair is showing a real trend reversal. Anytime you see ETH starting to outperform Bitcoin, that's when the real altcoin season begins. In fact, ETH BTC just posted its biggest rally in 2 years. Woo, woo. During previous downtrends, the pair would typically see a 25% bounce on recovery, but this cycle, it's already up 62%, more than double the usual move. Even stablecoin supply is surging. $3 billion in USDT was minted in the last 24 hours alone. Think of this chart like the crypto version of the M2 money supply. When stablecoin supply goes up, prices follow. It's a clear sign that there's new firepower ready to flow into Bitcoin and altcoins. That's a clear statistical signal that something much bigger is underway, and the rotation into alts is picking up some serious momentum. But I think this is just a start. So hold on, guys, because things are about to get wild. If you've been watching this channel regularly, you already knew the playbook and you were positioned before this move. A few weeks back, I laid out the momentum I saw building in Washington and Wall Street, and I explained exactly why I was scaling heavily into Ethereum at like $2,400, right? And if you haven't seen it yet, I'll leave a link to it at the end of the show. That thesis has now played out in real time. Anyone who caught that early signal with me picked up ETH and DeFi beta right at the lows. Even though Aave, Maker, and Curve and a bunch of meme-fueled ETH ecosystem projects have already started to move, I honestly believe the real structural flows are only just beginning. In fact, just last night, I rotated more of my Bitcoin into ETH. A few weeks ago when I made that video, I was probably about so I have my like secure bucket, right? I've got my secure bucket, which is like ETH and Bitcoin. And then I've got like my more risky stuff over here, right? But in my secure bucket, my blue chips, my ratio, like for the past year or something like that, has been 90% Bitcoin, 10% ETH. And then last week, when I made that video, I rotated to about 25% ETH and 75% Bitcoin. And now, just last night, I rotated even more to go 50-50. And if we continue to see ETH outperform Bitcoin and I get a strong confirmation, it's already looking pretty strong, but if I get an even stronger confirmation, I'll probably rotate that to like 75% ETH, 25% Bitcoin over the next couple weeks. Stablecoin clarity is about to unlock capital for crypto, especially protocols that can provide real-world payments, savings, and yield. My conviction on stablecoins and their intersection with DeFi was a big reason I sized up on ETH and top DeFi tokens before this breakout. And these tailwinds are the main reason I'm looking to hold for the long term. Yes, we've already seen the strong move, but I still see a lot more growth as new flows from TradFi and global users keep chasing on-chain safety. And we haven't even really got retail coming back. We're starting to. I'm starting to get the text. In my private groups, my friends are sending me texts from their friends who are now coming back to the market. It's starting to happen, but you're still so super early, guys. Now, I want to touch on something a little different, but honestly, it's just as telling for alt season. And that's on-chain meme coin sentiment. If you've been tracking the charts this week, you saw this meme SPX 6900, the meme coin that's riffing on flipping the S&P 500. It absolutely exploded to new highs. This token is one of the first to make new all-time highs and begin pushing into new price discovery right after Bitcoin. We've been talking about SPX 6900 all the way back since last October. Check this out. I made a post on this recently talking about how I actually took a very large position in this. And take a look at where we are today, from 660 million market cap to now over 1.7 billion. That's like a 3x. And it's clearly leading, and this is something that's clearly probably going to do something crazy. I mean, the absurdity of it is exactly what happens when I talk about this irrational exuberance of these parabolic portions of the bull market. And that's when people actually start believing and laughing that this meme coin is going to overtake the S&P 500. And that's a viral mimetic loop that just feeds into every degen in the world. And as the price goes up, it draws more attention and it has this flywheel, mimetic flywheel. And just like Doge hit 80 billion before, and Doge will probably go to 120 billion, this thing or whatever, I expect something like this SPX 6900 to do at least another 20, 30, 40x in this cycle. I mean, and that's going to be the peak blow off is what I'm talking about there. So the little, if you guys don't know, like the little inside joke for the SPX 6900 thing is that 6900 is better than 500. You can't argue with the math. It's so dumb and simple, and that's why it's great, right? You have to think about the meme coins like Fartcoin, hot air rises, it goes up, you know, these kind of things. I mean, every super viral culture meme coin has its thing. Some of them are hated and so stupid. Some of them are cool and just cute animals. Some of them get picked up by super famous people like Elon Musk. Whatever it is, we look for those. And we've been very, very, very good on this channel about calling out the biggest ones. We haven't really missed any of the majors ever on this channel. If you guys have been with me for a long time, let me know if I'm bullshitting or not in the comments below. Yes, I know, I can already see that someone's going to say, but Base, okay, Base is not a meme coin, guys. And sometimes I'm wrong. And as bullish as the setup looks, I always keep one eye on the technicals and one on the macro for shakeout risk. And if you're looking at the Bitcoin chart with me, you can see why that red box support zone around $112,000 is so critical. I'm watching this level closely. If Bitcoin loses that support, things could get ugly. But again, how I look at this, even if it does, I'm still holding because fundamentally in the long term, we know exactly where we're going. But those are the kind of things that could create some temporary downside. We got policy risks, government moves. These kind of things can catch people off guard, or something like the COVID pandemic, which gets us a black swan, but quick V-shaped recovery. All of that is possible to be fully transparent in the days and weeks and months and years ahead. And just look at what happened this week. Senator Lummis sounded the alarm after reports came out that the United States has sold off more than 80% of its Bitcoin reserves, leaving only about 29,000 coins. In her words, this could be a strategic blunder that puts the country years behind in the global Bitcoin race. Now, only a few X accounts have been talking about this and reporting it, so I would take it with a grain of salt for now until it's been fully confirmed. Personally, I wouldn't get nervous about this because Trump already made the executive order not to sell these coins. And when you take a look at Arkham, all the coins are still there and sitting in the wallets. So my guess Is the coins were just moved from one wallet to another or something like that? Either way, we'll stay on top of this and let you guys know the story as it develops. Meanwhile, in Washington, news broke that President Trump might replace Fed Chair Powell, sending shockwaves through the market. Investors instantly started worrying about more political risk at the Federal Reserve. That fear drove long-term interest rates even higher. The US 30-year Treasury yield jumped past 5%, hitting an 18-year high. That's a red flag for everyone watching the economy. It means the cost of government borrowing is spiking, which can push up mortgage rates, business loans, and even day-to-day lending costs. A jump in yields like this shows just how nervous investors are about the direction of US policy and the future of the Fed. When the bond market gets rattled, it usually means trouble for risk assets, and it often forces central banks to step in. And that's why Trump walked it back and said, I think it's highly unlikely. Another one of his taco trade things, right? For Bitcoin, moments like this can be a turning point. If the Fed responds by stepping back in with more stimulus or new QE, it tends to drive more money toward hard assets and away from traditional finance. That's why analysts are now talking about much higher price targets for Bitcoin. How much higher? Much higher. This is the most exciting, most asymmetric macro environment I've seen in years, basically my whole life. No joke. But you always need to know your levels, watch for policy updates, and never let your guard down. That's why it's so important to be subscribed and have your notifications turned on, guys. When you step back and look at everything converging right now, Congress unlocking the regulatory doors, Wall Street and global banks racing to control the digital dollar, the global South onboarding millions to stablecoins just to protect their families, and even meme coin liquidity lighting up on Ethereum. You realize this is the moment when crypto moves from the margins to the core of global finance. You've seen the proof, you've seen the data. This is about catching the macro flows, reading the real signals, and being early where it counts. Wall Street's $5 trillion power grab is underway, and the next bull run is going to be shaped by stablecoins, ETF supply shocks, and on-chain yield. If you guys have been riding with me on this channel, you're already positioned. And I believe you're on the right side of history here. Make sure you're subscribed, share this with a friend who needs to see it before the next big move, and drop your thoughts in the comments below. Tell me which country you think will light up stablecoin heat map next. Or if you're already using digital dollars in your day-to-day, the future of money is being rewritten right now, and you're watching it play out in real time. Have an amazing rest of your day, guys. And remember to stay sharp, stack your Satoshis, stack your ETH. We'll get into other ones later, and I'll catch you guys on the next one. See ya.